Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 9th of November. Well, I'm sure everyone is well aware now of the current situation with the US presidential election. Mr. Biden seemingly securing enough seats over the weekend to secure his place in the White House for the next 4 years. Having said that, Mr. Trump has yet to concede, and that still leaves the door open for more potential election volatility and potential market fireworks until that's sort of concluded. So I think we keep an eye out very closely on how that sort of develops. So far though, the markets have seen relative support now that there is some sort of stability coming into the markets. So we'll take a look at a few markets now, but before we do that, just to highlight that we're going to be running a live stream on Wednesday morning at 9 o'clock. You can join us live and we'll be taking a look at the live markets, covering the markets and the opportunities that we're discussing today, and also many more. The session is run live. It's also recorded and placed on YouTube as well, and you can gain access to that following the link below. So let's move over to the charts now and start to have a look at a few key markets here. So as I mentioned, the US equity markets have had a good boost. They've had a good rally since the conclusion of the election, and it even started once Mr. Biden was seen to be gaining on securing that sort of presidential vote. Now you can see that the market now, certainly the Dow here, is up against 28,600. So it's up against a level here that the market has found key support and resistance at in the past. It's been a level that market has reacted around many times as well. You can see this here on the 4-hour time frame. It's not quite up at the all-time highs here, and potentially still got a bit of a distance to go to get there. Having said that, the market has had quite a run already, and you can see that price action now is quite stretched from the moving average zone here, the geometry within price action, and it's up against a strong structure level. So this does lead to sort of question open as to how much further this can go before a retracement. So we're not suggesting even maybe a change of trend at the moment, but even some sort of pullback, which could be quite healthy on these markets considering the amount of extension that they've reached already. Now, if prices can hold above 28,600, we could start to see maybe a move up towards the 28 sort of 720 up here, which takes us into these highs on the 4-hour time frame, and that could get us sort of rather close to maybe trying to take a pop here for the 29,000 level and beyond. Having said that, all of these markets, they often do come back to some sort of geometry within price action at some point in time. So at some point we're going to be looking for a retracement, so we've got to be just careful of that, particularly considering the run that these markets had last week already. Now if we come to the metals here, gold is also, and silver is also looking rather bullish. It's joining the run here of higher prices, and you can see again that gold is now above our 1950 level, and again last week it's had quite a good strong week. So we're in a similar situation here, although the US equity markets, certainly the Dow there, was up against a resistance level. Here on the here on gold, we're above that resistance level at the moment. Having said that, there is still quite a run on this, and at some point in time we might expect some sort of retracement. This 1950 level could act as support though for these markets, and if it does, well then there's potentially, if we have a look here on the 4-hour time frame, if I was just sort of zoom out, you can see that the next level up here within the trading window we have as around 1975. And again, you know, we often, these markets do run to trading decision points and complete those trading windows before sort of either retracing. So as long as this market can hold above 1950, I'm going to remain bullish on this and see if we can actually we might start to see a bit of consolidation here, until we start to get up and build up enough momentum to get this next leg up, but are still going to remain sort of bullish on this one whilst the market is above that 1950 level for the time being. Now if we come over to the currency markets, a lot of these currency markets looking a little bit wary now with the whipsawing that has taken place over the past few weeks. One that I think is looking a little bit more interesting is the Kiwi Cad. Now both Kiwi and the Caddy are strong this morning, but the Kiwi seems to be having much better structure on the longer term trends here. If we have a look at the weekly chart, you can see that we've had these higher lows forming in the market. The market sort of recently testing off this 86 level and pushing higher again. So bring it down to the daily time frame, we can start to see these structures a little bit more clearly, and we can see that the market is up against a level here on the daily time frame. It's a level where we have found previous support and resistance a number of times. So clearly if we can get a break above here, it does push price into a new trading window to the long side, and we could pick up some momentum and a bit of drive there. You can see this a little bit more clearly if we come down to the 4-hour time frame. Again, if I sort of zoom out of this, you can see where price is. On the 4-hour time frame, we've got the start of a new uptrend forming here. We've got convergence on the indicators, and you can see that price has now recently made a higher low, and if this trend is going to continue, we're going to be looking for a higher high at some point here, and we can see that the market is breaking through this level already at the moment. So looking for continued strength here in the Kiwi Cad to the long side. So there's a few markets there that we're keeping a close eye on in the trading room at the start of this week. I certainly hope it helps, and look forward to speaking to you on Wednesday. Bye for now.